Hello traders, Gary Wagner here. It is approximately 11:30 in Honolulu, 5:30 in New York City. It is Tuesday, the 10th day of July 2012, and this is the daily report for gold and silver. Major sell-off in the marketplace today, pretty much across the board in the precious metals markets, with gold currently trading off about $20 on the day. 1566.50, 67.50 bid-ask spread on cash, off about 1.31% with a low of 1563.70 and a high of 1603. Silver off about 53 cents. 26.66 is the low. Current print is 26.91. Traders, we are witnessing a pretty sizable sell-off in the marketplace. As you can see, 420-minute chart, straight candlestick format. I will convert that to Heikin Ashi in a second. However, this sell-off is in response to a couple of outside forces, a stronger dollar, lower crude oil prices, but primarily due to minutes being released by the FOMC meeting tomorrow, Wednesday afternoon. Interestingly enough, I was watching this market as it traded through the night, and I typically try to watch right before and during the opening in New York, which in Hawaii is about 3 in the morning. So I get scattered sleep of a couple hours at a time. And what I witnessed was one of the more interesting things, not interesting in a good way for gold bulls, but interesting nonetheless, as I watched the market trade a couple of dollars higher right at around half hour prior to the opening of the New York markets. We saw gold really shoot up. In fact, it hit a intraday high of about 1603, and you can see that right in here. In other words, you can see through the nighttime session the market moving up. It hits this high, and at that point I felt the water was safe and I would check again once I woke up in the morning. Lo and behold, when I did, I witnessed something that I haven't seen in a while, and that was the market drastically selling off after being much higher in Europe. It went from about a positive $13 on the day to where we sit now, which is a negative 20 on the day. Traders, a couple of more charts I do want to take a look at in gold before we switch over to silver. And we have simply converted our 420-minute chart into a Heikin Ashi chart. The reason for that is we were looking yesterday at some of the telltale signs. And as we talked about these pivot points in the marketplace itself, right in there. As you can see, that small candle, the market began to move up. But traders, that wasn't to last very long, because as you can see, we went from green to alternating colors back and forth. And this is that tremendous high and low within a very, very short time span when we consider the market having a 1575 print and a 1600 print all within the same 420-minute time period. Traders, we are looking at a daily chart, Heikin Ashi format. It also has the Elliott wave count that we have been talking about recently. Of course, we are now very, very tenuously close to this bottom support line, as you can see right in here. And for a compression triangle to be valid, it must maintain itself above this support line. For if it doesn't, if it breaks through, my belief, or fear is, I should say, that we would probably retest 1530. If that didn't hold, the next level would be 1482. Those are the downside area support levels that I see. With the upcoming FOMC minutes being released tomorrow, I can tell you that I would not be surprised to see an increase in volatility. Traders, we are looking at our daily chart. This is July silver. As you can see, 26.76. You can also see that we have come close, but are still maintaining above what I believe to be current support levels, which is really just above 26, call it 26.20 to 26.30. Again, like in gold, it needs to hold that level for there to be any hope of finding support and bouncing back to the upside. Otherwise, I fear it will test some different support levels, and this support level will possibly even become resistance. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.